It's me, Povitran here. Before going into an weekly forecast recap of what are the levels which I have mentioned and how it has been reacting. I said it was trying to form an ascending triangle pattern or a kind of a peanut shaped pattern. If any of the levels get broken, then we might see a quick rally towards the side which has broken. And on 14th of August, the recent high which was made was $43 level, and previous recent high was somewhere around 43.50. So that was a recent high which has formed over there. And to be on a bullish side, if it breaks to 43, and if it again breaks 43.50, then odds of testing 45 and 46 will be on. That was I said on weekly levels. On lower levels I just mentioned, if it breaks 41, then 40 will be a biggest hurdle, and once it breaks off, then 39.5 and 38, these are the levels which has to be tested. What had happened on opening of Monday, that was on 17th, it was a slightly positive opening. After that, market again tried to test the low. As you can see here, it has keep on forming the same higher high and higher low pattern. This was a higher low, and this was also was an higher low which has formed on 12th. And as you can see on 14th, the higher low which was being made, it hasn't been broken, can't able to break the previous higher low. But on the same case, it can't able to make a new higher high. It means it's a kind of stuck in a range. If any of the range gets broken on either upper side or on a lower side, the trend resumes. Or if it breaks the previous higher low, then we might have to watch out for a new trend which might be coming. On this case, on Friday, still we haven't faced any kind of issues like breaking the previous higher low which has formed on 12th. So on Monday, as usual, this was the recent higher low, this was the second most, and this was the third. On higher high side, this was the recent higher high. On same as 12th and 13th, it was trying to test that C region, and it can't able to break that region. So we can just be waiting for a breakout on an above $43 levels for the trend to resume, or we have to wait either for a previous higher low to break, so that trend on a new trend might come into play. On Monday, as you can see, after a fall and without even testing the previous higher low, it started to move up. So kind of a trend is still intact on a bullish side. And once it breaks off 43, then we will be having a lot of steam into the market to push the market further to 43.5. That was my thought. That was the level which I mentioned. As you can see on Monday, that was a quick recovery to for near $43 level, and on Tuesday I was expecting a clear buy trend, and I also even taken a position somewhere around 1 o'clock, and it went nearly to $43 level. Afterwards, it started to face resistance, and after that, in the evening session, a sudden fall which has came. When market is in pure bull mode, if a sudden fall comes in, then that fall will be bought in, so that you don't have to panic and exit the position. Most of the people might have exited in this panic because it's a great bear candle which clearly indicates that the fall is going to be a tremendous one, which clearly states that it's a clear bull market. So you don't have to worry about it, stating that because of this red candle I have exited mission, I have initiated a great loss. No, you can't be exiting only because of the red candle. You have to analyze the trend, what is the current trend that is taking place, and whether this fall will be bought in or whether it's going to continue. Most probably, if a great fall had happened like this, on an wait for another candle close, and you can then decide whether it is going to break the low which has given in that fall. So in this case, the low hasn't been tested. After that, it has reversed or recovered nicely. Even if that level gets broken, then you can see this is a great support over this, and you can also see in around 41.5070, this is a great support over this region. It simply won't suddenly turn into an bearish zone from all the way till from Friday or from the past week, Thursday, Friday, and Monday. You can clearly seeing it's in a bull ride. Suddenly, if a market falls like that, it's a kind of a retracement. Most probably, all the fall will be bought in, and we can see a easy recovery over there. Even if it breaks the low on the next candle or the next candle, it will try to move further, because that is how the market is designed. Because most of the people would panic in these kind of situations, and they eventually lead to a greater loss. You should know till at what level you can handle. After seeing this candle that has formed at 18 on 18, I just bought in at this fall candle. That's a big red candle. I was expecting that it will be kind of a retracement, and I just bought in with the green candle low as my stop loss. My stop loss has been triggered and a great fall has came. After that, this was a green candle. It's a kind of a recovery, and then it has again resumed this trend. So I just thought, let's apply this 2 point strategy. If I am lucky enough, I will be getting a huge one on 80 on 20, that is 8 o'clock on Indian Standard Time. I just bought at the low with the previous red candle low as my stop loss. So as you can see, the low hasn't been tested. Before that, it started to go again up. So with a small stop loss of just 2 to 3 points, I am nearly booked from around 40 to 50 points nearly. So this is how you should know whether you have capability to take a trade, or if you have to get into a right time, you have to place a limited stop loss. If a sudden rally, you should not be panicking, and you should not be getting into a sell mode all at once. You have to wait for it. On Tuesday too, the same thing had happened. Market was trying to test the $43 level, and as you can see, it was a clear great red candle, a bear candle as usual. And you can also see the follow through candle. And I placed at 19 break above this level. Then I was expecting a sharp recovery, like on Tuesday I was expecting a cut of sharp recovery, so that I can able to book profits. I placed my buy above order above this red candle, that is somewhere around 19 candles, 7 o'clock candle high. If it breaks that, then I was expecting a quick of 20 to 30 cents. To my surprise, on 1730 candle itself, it's broke and rallied nearly to the high of the candle. As usual, it was a great V-shaped recovery. I wasn't expecting that. A slow movement I was expecting. So till now, what we have seen is that 43 and 41.50, that is the range, maximum $1.5 range. That was the maximum range which has been trading in crude oil. On Friday, as usual, a fall, after then a recovery. So what are the level we should be watching is that the main odd level is again 43, and if it breaks successfully 43, then 43.50. If it breaks on a lower side 41.50, again it will be tested. If it breaks, then odds of touching 40 is very high. And right now, crude is starting to form a slightly a kind of an lower high and lower low concept. As you can see here, this was the previous lower low. This was the this was the recent lower low. Previous one, as you can see, it is trying to form lower low scenarios, and lower high is same. If the lower low again gets broken, then the trend will start to go into an bearish channel. If it breaks 43, then it will try to again form an higher low. And if it breaks again the recent higher high which has been made, it will again resume into a bullish channel. Or else, if 43 is intact, then it will keep on forming a clear bearish channel, sorry, a clear bearish channel is in play. For example, I can able to connect with you the same. This is the place where I think, yeah. So as you can see, it is kind of forming a bear one. This is the first lower low, and this was the second lower low, and this was the third. So we have to wait for a market either to break below this trend line, or it has to break above $43 level, so that it is a very crucial level. Right now it is in bear zone. As you can see, it is starting to test the $20 20 RSI ranges on a 30 minutes time frame, and you can also see that it's taking resistance at 60. So that clearly indicates us the market on 30 minutes time frame, it's moving slightly towards bearish zone. Once it breaks off 60 and sustains above 60, and when it falls, if it start to take support at 40, then the bull zone will get resumed. If that's not the case, then bear zone is still intact. Let's see how this week goes on. And the major play will come only when it breaks a $43 level and $40 level, or even 41 has to break. So the range for a coming week is from 41 to 43. Either 43 has to break for a bull and 41 has to break for a bear. Until then, market will start to be mean consolidating, as irritating for us for the whole week. Let's see how this goes on. Thank you.